Hi everyone, hope you're all doing well. This is my US portfolio review. So today I'm going to go through my US portfolio and show you how it is all doing. I think this is really important to do just to keep the transparency up. You guys can see my performance, and it's funny to see how many stock YouTubers out here right now that we're in a bear market and how many are not showing their portfolio or have never shown the portfolio, but especially now there's been a big drop off. And I think it's really good to, it's okay showing off the portfolio in good times, but it's also really important to show it in the bad times, going through this bear market, and you guys can see what stocks are struggling from my point of view as well. So hope it's good for the transparency. And as well as that, I do this video every 3 months on the YouTube channel. I've done it for something like 4 or 5 years now, so you can go through the past 4 or 5 years and you can see my performance. But yeah, it's been a brutal time. Obviously, we've gone through a bit of a stock market crash at the moment, so obviously it's taken a bit of a beating. It's been a bit of a recovery though at the moment, which is positive, but still it's not where it was, say, prior to probably November time. November time, I think, is really when the stock market started taking a beating. But some things are doing well, some things are still on the kind of recovery side and everything like that. So we'll take a look. So I do it every 3 months on the YouTube side of it. If you do want it every month, we do an every month update on the Patreon. So if you do want to see a more monthly update, that's where you want to be for more regular updates. Also, I've got to say it's funny because recently looking at the market, pre-market today, all these prices from a portfolio taken from yesterday, but looking at the pre-market today, it looks very stagnant, and yesterday was very stagnant. It seems like everyone's kind of looking out for this CPI data on Wednesday, and that's really going to be the next drive of stocks. Anyway, we'll get stuck into this US portfolio. So I've got 2 portfolios. I keep one in Giro, I keep one in Trading 212, just to protect myself and my money that is split between 2 brokers. And also, actually, I've been investing now for 6 years, I think it is now. So actually, when I first started investing from the UK side of it, many of you guys, I don't think I've ever actually even told this story before on YouTube. Many of you guys might or might not know, Trading 212 was more of a CFD platform back in when I started investing. It didn't really have the ISA option, and it was a little bit more, I think it was like 2019 it started changing a bit more into like a bit more of a free model. Before that, you still had to pay for your trades, and it was about the same as the Giro. I used to have, when I started investing, I used to just use the Giro for the full year, for the first few years, and then it wasn't until like 2019ish when Trading 212 came more of a free model. It also started adding in an ISA as well. That's when I actually moved a bit more into Trading 212. So that's just a history of why I've actually got 2 accounts, which I never think I've actually explained before. But anyway, get on to the portfolio view, which is the Giro. To start with, which is Alibaba down 33%. That has taken a massive beating this month. A lot of pressure on Chinese stocks. You'll see my Chinese stocks have taken a bit of a beating this month. A lot of risk on about moving them off the New York Stock Exchange, for example, and stuff like that. So that's had a bit of a beating. It was doing quite well last month, but it's gone down a fair bit. Carnival down 61%. For you guys that don't know, bought this in 2018. Thought it's going to be a very decent value play. You're going to pick a dividend up, and then what would you know? Within a year, 2 years time, we have the CV situation, and it kills the whole travel industry. One of those things you can't really predict, which is a bit annoying, but I'm still holding because I think Carnival will come back with good numbers going forward, and I think that when you look at what it's priced at, I think we should see some recovery there. Unfortunately, it does probably mean that I'm never going to walk away with the return that I was hoping for when I invested into it. But I don't want to sell at these valuations, but unfortunately that's something that was out of my hands that came out of nowhere. So it happens, it happens sometimes. Next up is Celsius. They're actually reporting earnings today or tomorrow, I can't remember exactly. I'll have to double check that. We'll see what happens there. But yeah, it's performed absolutely amazing, up over 65%. Obviously, it's coming off the back of the Pepsi news, which is obviously a really positive sign that Pepsi are willing to take a stake in the business. So that's doing absolutely amazing. One of my bigger positions that I've been building up, one of my newer positions, in fact, actually. Then we have Dropbox. Earnings were good once again. It's just a steady performer. I generally think Dropbox should be a little bit higher than where it is. I think it should be up over more than 50% right now. It's just a steady performer, steady grower. Happy with Dropbox in there. Next up is Meta. So I'm currently up 9% on this one. The crazy thing is, a few months ago prior to the crash, that was a stock that's up over 100%. I had the shares in Meta since I think I think 4 years now. So it's been a while. Disappointing to see it's been killed off a little bit recently. I think that when you look at Meta at 12 times earnings, there's a lot of negativity priced in. Like, even if you think like Meta is not going to be that much of a successful business anymore, it's still going to grow. I think everyone knows after these tough comps, at least like 4 or 5% a year, grow profit 4 or 5% a year. Pretty decent established company. Should trade at a bit of a premium, more than 12 times earnings. So even worst case scenario, I think you can, you say this should be a lot higher, and then you factor in the potential growth further down the line, and ramping up that advertising, potential metaverse expansion. So yeah, happy to keep holding this one. Next up is Gang. That's down 62%. These guys are reporting earnings next week, so we'll have more information on them then. But yeah, I think this is a crazy low valuation. I think that Gang at the moment should be at least $15, so that would be easily. I originally invested in this one because I thought it had double the upside. Since then, it's just been absolutely killed. It's gone to way lower valuations that I thought it would ever go to. I think it's trading at like an under 1 price to sales ratio. Hopefully pushing in that profitability this year as well, which would be great. So yeah, I think that's an absolutely fantastic one. The only reason why I've been a bit reluctant to buy a bit more Gang is just because it makes up quite a decent size of the portfolio already. A bit high risk for a company in Gang's stage. So that's the only reason why I'm kind of holding off it at the moment. But if it wasn't for that, I'd be buying it for sure. Here, down 76% on this one. Very much like Gang, it's been killed off a huge amount. Unfortunately, obviously Chinese stocks are being killed, like Alibaba, for example. It's continued into Huya. A few things that have worked against me with Huya is that we've had, first of all, a lot of Chinese regulation. So you've probably seen the restricting the amount of gaming time. One thing that they've also put in is on streaming, they're limiting the tips as well, which obviously Huya relies on tips, which isn't great. It also has tough comps coming off at the moment. They also blocked the merger between Huya and Douyu, which was dragged out for nearly over a year. So basically, like, the Chinese regulations have put 3 or 4 big restrictions on this stock. And it's a bit like, it's very hard to predict that China are going to put that many regulations in. It's made it a very tough time for Huya. I do think it's a very low value though. When you look at it's got more cash than what the market cap is of the company. That's insane. So I do think it's incredibly low value. I do have to say that my optimism for this stock in the longer term has been brought down a little bit because of them restrictions that China have now placed on this business. But I'm still holding. I still think that I'll do okay from it. I just think the upside is probably a little more limited now than what I had forecast for a few years ago, which is a bit frustrating. Once again, it's a bit like Carnival. You can't really predict that was going to happen, which is a bit annoying. But yeah, I'm still holding because I think to sell at these levels is just insane. So yeah, holding that one right now. Next up is JD.com. I've held this one for 5 years now, 6 years, up 260%. I've sold about half my position off since that time frame. Still holding some though, because I think it's a fantastic business, and I think that once again this is still not a bad valuation at all. Microsoft, one of my bigger positions. I've had this one for 5 or 6 years now. Pays me a great dividend. I'd love to make it a bigger position again and make sure it's still a chunky position. The only problem is the valuation. I don't really want to be paying up like 29 times earnings for Microsoft. Ideally, I would want to be picking up like towards that low 20 range. So it's just a little bit high for me right now, but it's a fantastic business. Pinterest down 9%. It's been on a good run recently. Yeah, I think that has a very good future. Once those users, Wall Street will be happy when them users are sorted out and it'll go back up. TDoc down 64%. To be honest with you, I'm not really buying any TDoc at the moment. I've just been more prioritising HIMS. I think it's a better business, and I've just been looking at the information coming out from TDoc, and it's not really impressed me. So I'm just kind of like, yeah, I'm just kind of leaving that one at the moment. Visa up 42%. This has actually done really well recently. So yeah, it's been a good hold. Same again, had that one for a few years in this portfolio. Walt Disney down 6%. That's had a bit of a pullback at the moment. But yeah, I've been trying to make that just a little bit of a bigger position. I think it's got a fantastic future. And that is the Giro portfolio. And that leads me on to the Trading 2 and 2 portfolio. So I've got some Walt Disney here as well. I've got some Alibaba here as well. Next up is Google. I would love to make Google my biggest position. I'm up 6%. I'm a little bit stuck on what to do with Google at the moment. I'm like 6% up, and I'm like, oh, do I want to carry on buying? Or I'm not sure. I'm not sure what I'm going to exactly do with Google. ideally, I would not mind Google being one of my biggest positions. I think it has a fantastic future. I don't know how much I want to kind of like average up on it. So yeah, suppose we've only been 6% up. I am kind of tempted to just kind of carry on building that position up, because I would really like Google to be one of my top 3 biggest positions. I think it's it's the cash generation it's going to do, the balance sheet, the growth still in it. So yeah, I've always wanted that to be a big 3 position, so I might still carry on building it up. It's just a little bit annoying because I wanted to get it a little bit lower than where it is, but in the long term, I think 6% isn't going to matter in 5 years' time. So yeah, I'll probably try and build that up because I do want to get Google. My plan was always to get Google, PayPal, and Meta into my top 3 positions on this dip. PayPal, I've got close-ish. I'd still like it to get it a little bit bigger. Meta, yeah, I've got Meta into my top 3 positions when you add both portfolios up. So that's still my plan. If I can do it, that'll be absolutely amazing. It just comes to how much I want to average up on them. Beyond Meat, I'm down 60% on that position. I don't really want to buy it. I looked at last earnings, they were terrible. So yeah, I'm a bit stuck on Beyond Meat. But looking at Tattoo Chef earnings actually last night, they're somewhere in the same position. So could be a bit of an industry issue like Corsair and Turtle Beach, for example. They both put bad earnings in. ASOS and Boohoo, for example. So one thing that I have learned, that I've forgot a rule that I've been breaking recently, is that I've been buying a few companies in the same industry, which I always preach about not doing, and I've done it myself, which is something I've noticed over these last few months. So yeah, Corsair down 32%. I think this is still a good company in here once it sorts out this year. So I'm just holding that one right there. DK, I'm probably fully built now. That position size is getting very big. As you can see here, I'm probably happy to hold that one now. I don't want to put any more capital in there, but yeah, I'm ultra bullish on that one. Down 37% on that one. I think without very quickly you'll see that go bonkers, because it's absolutely fantastic, financially performing amazing. EHang, a very small spec position you can see here, that's down 79%. That's just a risk on if drones do well in the next few years. We've got Mesa down 8%. We've got Callaway Golf that's flat. Could potentially buy a bit more Callaway. They're doing absolutely amazing. Hims up 15%. Will be up probably a bit more today. They reported earnings last night. Fantastic. It's 10 out of 10. There's like, when you look at the numbers, like DraftKings, unbelievably good. InMode was unbelievably good. PayPal, same again. Hims, fantastic. These companies are on fire. So yeah, I've got a decent position size. Maybe it could be a little bit bigger, I don't know. But yeah, I'm happy. I've got a fair bit of cash now, I'm happy. InMode up 102%, they've been on absolute fire. Planet 13 down 61%. Would not mind buying a bit more of it. It's just a bit of a high risk one, so I just want to be cautious of that one. PayPal up 2%. Same again, I would love to buy a bit more. I don't know if I want to average up though, that's the only tricky thing. Shopify down 44%. Potentially could buy a few more Shopify, we'll see what happens. Skills down 86%. They've got big turnaround issues. They've got a lot of work to do, so we'll see where they're at in the next few years. Yeah, I still think there's a decent business in there, but there's a massive turnaround that the management have to execute on, so I'll be watching that one. Square down 36%. Maybe buy a bit more. I'd just rather prioritise PayPal, but yeah, I thought Square's numbers were okay. Still think the subscription side of it is growing massively. Cash App's still doing well. Turtle Beach down 23%. That's probably actually going to be down more after the earnings that came out. And TTCF, that's down 50%. Their earnings were weak as well. So yeah, I've not really got confidence to kind of buy them at the moment, to be honest with you. So yeah, overall, there's some stocks doing really good. There's some stocks that are still trying to do the recovery since the big crash that we're being on. Overall, my kind of thoughts is that I might try buy a bit more Disney if I can. In this portfolio, I don't know if I'll buy Gang. If the earnings are actually blowout earnings, then potentially I will. I'm just trying to manage that position size in it. But the only one I'd say is probably Walt Disney in this portfolio that I'm considering buying. In here, obviously Google, I'd love to make Google a lot bigger than what it is. I'd like to make it in top 3 position, so I'll keep an eye on that one. DK, I probably won't buy any more DK now. I'm quite fully built on it. Meta potentially, Callaway Golf potentially. I mean, unless Hims has a big drop off, then I might buy Hims, but I don't really want to buy any more now. An average up. In mode, yeah, fully built on that one. Obviously doing well. PayPal, I'd love to buy a bit more of. So yeah, those are kind of the ones that I'm kind of looking at probably prioritizing in this month anyway. So yeah, I'm actually doing 2 deep dives on companies at the moment that I'm considering as well potentially. So we'll see what happens there. But yeah, that's the US portfolio anyway, guys. Hope you enjoyed it anyway. And yeah, I'll see you on tomorrow's video. Just to let you know, I am going away tomorrow, so it will be pre-recorded. And then on Thursday, there won't be a video from me. I'm probably going to be away for Thursday, but then I should be back on Friday. So anyway, hope you enjoyed the video anyway, guys, and I'll catch you in a bit.